Our next speaker, Matt Bennett, is a co-founder of agmarket.net. He is also a Windsor, Illinois farmer and former grain elevator owner. He is Channel Seeds grain marketing consultant and holds a Series 3 brokerage license doing business through agmarket.com farm division. Matt brings a producer perspective to the table. Enriched with his extensive grain marketing background, he specializes in formulating risk management strategies for corn, soybeans, farmers, and livestock producers. A graduate of University of Illinois, Matt and his wife Tiffany live on the family's centennial farm north of Windsor, where they are raising their 5 children. He owns and operates a 3,000-acre corn and soybean farm with his father while raising 60 head of registered Angus cows. Please join me in welcoming Matt Bennett.
All right, good morning. How many of you guys feel like you did a good job marketing the 2023 crop?
The first half.
The first half, okay. But overall, you guys don't feel like you did a good job marketing it. I mean, it's kind of a tough year, wasn't it? Lately, I've had a lot of people, just right in the back, someone said, you know what, do you have good news for us? I think Robert said that. We just want good news. And I've had that everywhere I've gone. So typically the way I start is like this. I know everyone wants good news this morning, so thanks for coming out. We'll see you later. And I hate to be like that, but we have a challenging situation. Does it feel different than what it did a year ago? Right. We need some interaction, guys. I typically, I'm going to call on you for some interaction, but in my opinion, we made a few mistakes over the last year or two. We can learn from them. I'm not going to beat you up over them, but I'm going to talk about the drop in grain prices for sure, kind of what I think is going to happen. But if I'm 100% honest with you, I don't know what's going to happen. Anytime you hear a grain marketing person that comes in and says, hey, resolutely, this is what I think is going to happen, and here's why it's going to happen, best thing you can do is get up and leave. I'm serious. They're going to cost you a lot of money. Because do they know? No, they don't know. And so we're going to talk about profit margins. If you've heard me talk in the past, if you've heard me on TV, we will talk about, hey, what's the market going to do, Matt? What do you think? Well, here's the deal. What I need to know is can I make money at today's prices? What do I need to do from a risk management perspective at today's prices, considering my input costs and whatnot? And when you're talking input costs, risk management is about more than the price of corn and beans. And what do I mean by that? Well, guys, how many of us would say the timing of our fertilizer purchases really got into our pocketbook over the last year or two? Anyone? Other than me? What did we do wrong for the 23 crop? Did anybody pay multi-year highs for fertilizer prices in the room? A few. The rest of you paid cheap fertilizer, correct? Did we all pay multi-year highs if we were paying in the fall of 22? Yes, we did. Okay, so here's the deal. When you're paying multi-year highs for fertilizer, what else is going on? What'd you say? Someone said something about grain prices, right? How many times have you seen really low commodity prices and multi-year highs in fertilizer prices? Have you seen that in the past? You're always going to say fertilizer is too expensive, but what we did wrong is we paid multi-year highs in fertilizer prices, and far too many of us sat on our hands whenever it comes to selling corn. Okay? And so what have you done then? You've opened yourself up to a potential disaster, an absolute disaster, because when the pendulum swings, it swings hard. It swings hard. And so that's what we're dealing with today. It's a challenging situation. There are ways that we can combat it, absolutely. But the last thing is what do those challenges force us to do? When you're making a lot of money, so how many of you would say that the U.S. grower on average, I know there's drought in the Western Corn Belt, I know that some of you didn't have great crops at times, how many of you would agree with me that in 21 and 22, the U.S. grower made a lot of money? Anybody? I'm telling you guys, back to back, I don't know that we've ever seen 2 years like that. 21 and 22, we had a lot of growers in the Corn Belt with $300 to $500 per acre net profit margin. That's not normal, okay? So what do you do when you're making a lot of money? What'd you say?
Buy the neighbor's land.
There you go. You're trying to spend money, correct? Whenever you're making money, you spend money. When you quit making a lot of money, how easy is it to quit spending money? You know what I'm saying? I was doing Farm Progress Show for Case H. Good partner of mine. Really enjoy working with him. I was getting ready to say maybe we ought to hold off on some of our equipment purchases, but I thought that might not be the best place to say that, so I backed off. But yes, we've updated equipment. Yes, we've put in a lot of tile. That's great. There's a lot of things to make our farms more efficient, but we've also spent a lot of money. We've also spent a lot of, and this does not seem like the type of environment to me that we need to be going out there spending a ton of money. Now, how many of you guys have a hedge account? Okay, I think you guys will like this slide. It's a little dark, but I think it's kind of funny. We just had a USDA report yesterday. February report is typically not that big of a deal, but yes, we came in, I updated my slides. The one thing I want to point out with the USDA report is this, all right? There's several things we're going to talk about, but here on a big picture scale, upper right-hand corner, every single one of these numbers has what in common? It's got a minus in front of it. This is a deflationary commodity environment, and if I'm going to say, hey, let's just talk corn and beans. That's going to be the focus of our talk today. Beans outperform corn one marketing year on the next. Unfortunately, it's by virtue of losing less, right? I mean, you look at corn. This is your average commodity price. The forecast for cash price is down $1.74 year on year. Beans down $1.55. Typically, if you lose $1.74 on corn, you're going to expect to lose at least, what, $3.50 or more on beans? Just as round figures, correct? So beans actually performing better. It's a very challenging deal, though, whenever you're in that sort of a deflationary environment, because whenever you go to upper levels of prices, what do you also have happen when commodity prices go up? What else happens? We just talked about it, but what? Everything goes up, correct? Everything that you're dealing with goes up, and they don't come down super fast. Now, whenever I start looking at principal crop acres, and again, I'm just going to start with some big picture stuff. One thing I want us to be encouraged to think about, yes, we had an increase in principal crop acres last year. Why wouldn't we? With commodity prices where they had been, okay? My thought process is that we're going to lose a few principal crop acres this year. Why? Because of profitability. They'll tend to fade. And you say, well, what about 2015 through 19? We weren't exactly killing it then. But guys, 2019, it looks like 2019 and 2023 were very close as far as principal crop acres go. But true or false, we've lost a lot of tillable farm ground in the U.S. since 2019. Yes or no? It's been taken out of production. And I'm not throwing shade at anybody. I talked about this with some guys last night. I've got cousins south of me, probably 45 miles. These guys could have sold their ground when it went into solar. They could have sold it for, I'm going to say, $10,000 if they were lucky, okay? They entered into a solar contract, a 27-year contract, where they're paid $1,200 an acre, all right? Could I fault them for doing that? Have they ever made $1,200 an acre net profit on that farm before? Absolutely not. We've lost some tillable farm ground. My challenge to you, I don't believe that we come up with as many acres this next year in totality as what we had last year. You look at the funds, and let's just say it this way. Big money pushes the markets around. February, again, it's not a big report, but what happens going into USDA reports? These algorithms are designed and built by the funds to trade market numbers. So let's say yesterday, if the USDA would have come in with a really low number for Brazil, for instance, you would have probably seen natural buying, boom, like that in a matter of milliseconds. You're not able to counteract it. The problem with the funds currently today, they don't want to own commodities. They're just not interested in buying corn right now. They're pushing a 280 to 300,000 contract short. And so if you're familiar with the markets, if someone's short 300,000 contracts, what do they have to do to that at some point? They have to cover it. And so how many of you say, well, yeah, when the funds cover these shorts, this market's got to go higher, correct? That's the way our minds work. What's the problem with that rationale this year? You're talking, a significantly smaller chunk of bushels than who has a hold of currently. The U.S. farmer. The U.S. farmer's sitting on probably 10 billion bushels, my friends. And so whenever the funds are short, let's say less than 2 billion bushels, okay? I mean, bottom line is this. For every rally that you have, what are you going to see happen? Sellers. You got willing sellers. Okay, so this market is definitely a challenged state. It's in a challenged state. So every single rally that we see lately, this is pretty much what we've seen happen. I got to have a lot of jokes this winter, guys. I'm sorry. There's just no way around it. Whenever it comes to marketing, and I told a couple guys this last night, people come up to me and they say, hey, your presentation hardly ever changes. You pretty much say the same things year after year. Watch your profit margins. I said, that's because nobody ever listens to a thing that I say, okay? And so I have job security, if you will, all right? The other thing is this. I know there's a lot of husbands and wives in here, and I don't know if you guys have ever had conversations like this before. I love my wife to death, but sometimes I feel like she might be a touch negative on me, okay? You know what she says she is instead of being negative? Realistic. Realistic. Who said that? Did someone say that? Yeah, that's what I'm going to be this morning. I'm not going to be negative. I'm just going to be realistic with you guys. We're going to try to put our heads around this. What's world production look like? Okay, so if the U.S. farmer made a lot of money in 21 and 22, did anybody else in the world make a lot of money planting corn in 21 and 22? What do you think? Absolutely. Hence, 76.6 million extra tons year on year of corn production. Yes, there's going to be weather issues here and there, but guys, you've got quite a bit of corn to deal with here on a global scale. You've got, production has gone way up. I thought it was very interesting. All right, Brazil, here's the problem. Brazil has, 3% more bean acres this year. They're not going to plant as much corn, all right? We're going to get to this later, but it was very interesting to see CONAB come out yesterday, and I believe they were at like a 113.6 as far as the Brazil corn crop's concerned. USDA is at 124. When I'm looking at the bean situation, USDA is lagging there as well. They're slow playing. Typically, the USDA is kind of slow in making adjustments on the production side to the downside, but sometimes it works out really good for them, okay? Personally, I think they're too high on production right now. But regardless, how does this impact things? Because you can argue. I mean, how many of you guys get frustrated with the USDA reports? If you're totally honest about it. Anybody? You guys are liars in here. I know you guys complain about it. Here's what I'm going to say. Whenever it comes to the USDA, let's just ask you this question. How many of you know what your yield's going to be on August 1st within 5 bushel on corn? Raise your hand. And how many of us are just madder than a wet hornet that the USDA miss it by 2 bushel? You know what I'm saying? On 90 million acres? They've got a big job to do. I don't want their job. I've talked to Lance Honig several times. It's a challenging job that they have to do. Do I personally feel like the Brazil crop needs to come down? I do. How does this impact everything, though, is this. You look at this marketing year, it's the second column from the left, 300 million tons up to 322. It was 325 before yesterday, 322. What's that mean, 300 to 322? We're raising more corn globally than we're using in simplistic terms. If you're raising more corn globally than you're using, what does that mean for price action? Anyone? Soft. That's what it means, okay? What does it mean as far as the U.S. balance sheet's concerned? So you had 1.36 this past year, 2.17, very small adjustment yesterday, but regardless, 1.36 to 2.17 means you're taking U.S. stocks up over 800 million bushels from one year to the next. 1.36 plus 800 is well over 50%, correct? What does that mean for price action? What would that typically mean for price action? Lower, soft, correct? Here's the big question, though. How much of this is already in the market? I mean, that's got to be the question, because obviously we've taken a beating. I mean, we've taken an absolute beating so far. And so that's the big question. So I just want to go through a couple scenarios. The first one's going to be 91 million acres. What I'm going to do is I'm going to take the USDA's 2.172, plug it in to some different yield scenarios at 91 million acres. I'm not saying we're going to be 91. It's just a number that I've kind of had my head wrapped around. My ag market team will put an estimate out for the March 31st planting intentions, and I assume it's going to be different than 91. We're going to use that right now. I'm going to keep my demand constant year on year because you got to start somewhere. If I use 91 million acres, you can see right there, 178 bushel yield, and you're looking at what, 2.37? That is, again, stocks building. It's not wildly bearish, but guys, that's not bullish, is it? No, it's not bullish. Okay, 182. I'm throwing a 182 into my scenario. Why would I throw a 182 in my scenario? Because I think one of these days Mother Nature is going to cooperate. And if you think with a 177 in 23, given the issues a lot of us had, that we can't raise a 182 or a 180, I think you're sadly mistaken. And so I ask people, what is your marketing plan for a 180 national yield? Because when 180 does show up, God forbid it does this year, and I mean, what are we all hoping for? A drought everywhere but our farm, correct? I mean, if we're honest about it. But what if a 180 happens? What's that mean for price action? I mean, it's not pretty. It is not pretty. And so crop insurance, as Jim said, it's a great risk management tool. I would take it a step further. If I'm buying crop insurance and I've got insured bushels, there's things I can do on a marketing side of things that I can even insure myself better. But you've got to use the tool if you're going to step in there and buy it. Now let's get even more bearish. I'm sorry, but I just want to look at farm futures number. 92.8 million acres. Survey-based approach is what they said. I'm going to use the exact same methodology. Go all the way over to the right, and what do you see? 182 with the 3 billion carry. All right, so I put a tweet out here, I don't know, I'm going to say 2 weeks ago, and I said if farm futures acreage is correct, I see two distinct threes in our future. The forecast for 3 billion carry out, I don't see 3 billion happening. What would happen if we end up with 92.8 million acres on March 31st? What do you guys think is going to happen? Unless the safrinha crop is in major trouble, you're looking at a lower trade, and I don't really care where we're trading at the time, okay? What does that lower trade do for us, though? What happens whenever you get the price of corn cheap? You start to incur what? Demand. You're building demand, usage, okay? If you get a supply-driven rally because of safrinha, what is the staying power of a supply-driven rally? It's not great. It will come and it'll go just as quickly as it showed up. But if you have a demand-based rally, that is something that we can get excited about. Is that going to happen overnight? No. So I think that 24 could be a very, very challenging year, okay? I don't want to get super bearish on you. I just want to paint the picture. Now, a very interesting thing occurred in 2022. Obviously, the Western Corn Belt had an epic drought. All right, 2023, they healed up somewhat. But if I look at the increase in production in the western states, I'm talking North Dakota down to Kansas, those 4 states have what in common? Other than the fact that they had a drought. They have a lot of what? Cattle, right? I mean, there's a lot of usage in your Western Corn Belt states. How did this come into play? How this comes into play is that whenever you have a usage area that can't fulfill their own usage, what happens to that particular area? What do they have to do? They have to buy corn. They have to bring it in. How do you bring in corn from another area? You guys are all talking at the same time. I can't understand you right now. Guys, come on. What improves when your area needs corn? Basis. Thank you. Basis improves, okay? And so what happened? Most growers throughout the entire Corn Belt, probably cut off somewhere into Indiana, really had a great basis for the 22 crop, all right? I'm going to show you exactly how much it impacted me locally, but I want to tell you a story first. I had a grower in Liberal, Kansas. There's a lot of irrigation in that part of the world. There's a lot of cattle in that part of the world. He calls me in the middle of fall 22. He says, I'm picking corn today. And he said, it's good under the pivot. I mean, he's talking 225 bushel corn. He said, I'm just trying to figure out, do I put it in the bin or do I sell it? Because the feed yard wants it pretty bad. I said, well, how bad does the feed yard want it? And he said, they'll give me $9 a bushel for it. And I said, what was your freaking question again? I mean, that's, in my book, that's about $2,000 an acre gross, right? Gross revenue. First piece of ground I bought in my part of the world was 26 and a quarter an acre. What's it going for today in central Illinois? You wouldn't buy that 40 for less than 20,000, I can assure you that. He tells me, I said, why in the world would you put that corn in the bin? And you know what he said? You can probably guess what he said. He said, on this farm, we always put corn in the bin. Anybody ever made a stupid comment like that before? This is how we always do things. This is how we're going to do them again today. All right, and this is what I said to him. I said, you know what? That's just not very smart. I mean, I don't know what to tell you. And he said, I know. He said, now that we've talked about it, I feel like I can make a better decision. He said, I didn't know what to do. What was going on? People were begging for corn in the Western Corn Belt. My local elevator knew I was putting corn in the bin. People say, how can you talk with such conviction about the markets? I've made every mistake there is to make. I have. All right, I'm picking corn in the fall of 22. It's making 240 bushel an acre. And what was I doing with the corn? Putting it in the bin. Why was I putting it in the bin? Because that's what we always do on that farm. My grain originator calls me. He said, are you really putting corn in the bin? It's 680 in here. And he said, I need your corn. We've got to have corn to ship west. And I said, okay. I said, what will you give me? And he said, what do you want? I said, $7. He said, done deal. I quit putting corn in the bin. True story. Why did they need corn so bad? To get it out there, because that area was paying a $2 over basis just to get their hands on it. What's going on with basis this year? It's nothing even close to it. So you're looking at ADM Decatur, huge usage area. It's where Farm Progress Show is. $7 corn at the end of calendar year 22 with a 25 over basis after Illinois had a state yield of 216. Now you're going to tell me that a state like Illinois raises that kind of corn and you got a 25 over basis at the end of the calendar year? I don't know that we'll ever see it happen again. That was an incredible dynamic with $7 corn. So what was the case this year? It's pretty depressing. You look at it for what? 473 with a 2 over basis. What did it all come down to? Western Corn Belt needed our corn the year before, and a rising tide lifts all boats. Unfortunately, that tide's down, and that tide is down to where all boats are going the other way. The ethanol margins dipped here recently. Ethanol margins, the good thing about ethanol plants is that they typically do a really good job of risk management. We see usage staying strong, and in fact, I could have seen the USDA bump up corn usage for ethanol, maybe 25 million bushels yesterday. They didn't. I think it's coming. And we see their profit margins staying strong enough to where we're going to see ethanol plants boil through a lot of corn throughout the rest of the year. Is it going to be an incredible amount? Not necessarily, but I think they'll raise corn usage for ethanol by the time the marketing year's done, maybe 50 million, but we need every bit of that we can get. Now, what are prices as of the close yesterday as far as exports are concerned? I assume if you guys have been watching, our exports have stayed fairly strong. Why are they staying strong? Because versus Brazil and Argentina, as you can see on the screen, including freight to get it where it needs to go, we're looking at a fairly competitive situation. Are we the cheapest? No, we're not the cheapest. In fact, you know, we're a little bit more than Argentina. Argentina only has so much corn to put on the market right now. But the bottom line is I expect U.S. exports to stay fairly strong. Are we going to go above and beyond what the USDA forecasted? I don't know that I'd go there quite yet. It all depends on the safrinha crop out of Brazil. If the safrinha crop out of Brazil is a bust, that is one of the things that could give us some life. It could give us some hope. So that's what the chart looked like as of the close yesterday. Obviously, that's an ugly chart. And I'm no technical analyst. I've got a technical analyst on my team, Brian Splitt. I think he's one of the best in the business. And he could tell you all kinds of things about this chart. This is actually a snapshot from my trading platform. And so in my highly technical analysis, it looks to me like it's running out of room to go down. So maybe it won't go any lower. I don't know. I mean, I'm serious. If you come in there on my computer right now, that's what it looks like. But guys, that's the lowest close in 3 years. I mean, we continue to make new lows in the market. The nice thing was, before I got started, we were up 2 cents. And then right before I got started, I think we were down a penny, penny and a half again. True story. In the last 2 years, I was standing in front of a crowd. When I started speaking, corn market was down 3 cents. By the time I got done speaking, I didn't know this, but the corn market was up 6 cents. So the first question from the crowd was a request that I continue speaking. And I said, why? He said, corn's rallied 9 cents in the last 45 minutes. I said, yeah. But anyway, that's what your chart looks like. It's ugly. I don't know what else to tell you. Okay, as far as old corn goes, the problem you've got is any sort of a rally, you're going to see what widen? Basis. We've already talked about it. Bottom line is you got to find a way to get 10 billion bushels of town. Have you ever heard someone say whenever you get the corn out of the farmer's hand, maybe you can finally start to rally the market? And why is that? Because this massive wall of hedge pressure will dry up. Now, I got another joke for you. This is one of my favorite guys of all time. Remember when these 24 corn, and Chris Farley didn't say this, by the way. We just kind of overlaid this. That was awesome, right? And it was awesome, but let me tell you this. I think we got a decent shot at getting pretty close to $5 again. I'm not saying we'll go above and beyond it. I think we've got a decent shot, okay? But let's be cautious in how we market this crop, all right? There's a variety of reasons whenever I wrap up that I'll give you as far as what my thought process is and why we should market the way that we should market. But a lot of us will get in a situation where we'll say, well, I don't know if I want to sell any $5 corn. I sold corn in the last year or so for $6, $6.50, and $7. I mean, that's got zero to do with 2024 crop, correct? You know what I'm saying? How many of us get wrapped up in all the wrong stuff whenever it comes to marketing? You look at that DC24 chart. Oh, DC24 chart, I mean, it doesn't look much better. It's a very similar situation, but I do think that you've got a chance to get this market off its feet, but my big fear is this. If you get a rally, but the safrinha crop is good enough, I'm not saying it's got to be a banger, but it's decent, and then you come in here with 91, 92, 93 million acres. You've seen the balance sheet. You've seen how it's going to react. What do you think the price of corn is going to be next October? And I've got a real fear that we could be looking at sub $4 corn. It's possible. And so we have to have a game plan for that. If you tell me, well, 470 doesn't work very good, I ask you, well, how's 4 work? And I'm not trying to be a jerk. I'm just asking a question. Like, you got to think. You got to think about how this can impact you. I'm going to talk soybeans, and then we'll get to profit margins. World soybean production. Once again, the USDA lowered from 157 to 156. CONAB is a shade under 150, all right? I have seen times when CONAB was what you would call to the extreme, and USDA wasn't, and USDA ended up being glad that they approached it the way they did. But regardless, world production is up. Now, understand this. A lot of folks have talked about how Brazil, having crop issues is going to make this market take off and rally. But you've got to understand that last year Argentina had what I would call like a biblical level drought, half a crop. And when you have half a crop, when you normalize production, as you can see here, Argentina goes from 25 to 50 million tons. When you go from 25 to 50, what that means is that South American production is extremely likely to be up year on year, regardless of what Brazil does. Okay? So if you want to start getting bullish on me, based upon Brazil production, get them 25 million tons off of last year. How easy is that going to be? What did I say? How much more beans did we plant in Brazil? Were you guys listening to that? 3% more. All right, so you're planting 3% more, and you want to go down 25 million tons from 160. That's a tough row to hoe. And so bottom line is production is definitely in good shape. You look at U.S. world soybean supply. You're still building stocks today. I'm not a huge fan of this particular slide. I put it in there because the USDA gives it to us. The only reason why I'm not a huge fan of it today is I think there's a lot to be known about the Brazil situation. But regardless of how much you bring Brazil down, I struggle to think that you're going to lower your world stocks year on year. I think it's very unlikely. And so you're still in a stocks building situation. Now, earlier in the fall, late in the fall, early winter, I talked a lot about how the U.S. situation was tight, okay? World situation was not tight. And the thing that was concerning about that is what world arbitrage can do in that particular situation. What have we seen happen over the last week or two? We've seen beans come into the southeast coast. There's talks of soybean oil coming into California, all from South America. You say, well, that ticks me off. Well, these are global, national, multinational companies. Where are they going to source their stocks from? The cheapest place, correct? And that's the way that it works. And so USDA came in yesterday and said, hey, actually, we're going to lower exports 35 million, which was probably a warranted change. Now you're looking at a 3.15. Here's the problem with a 2.17 and a 3.15. The last time you saw a 2.17 carry or above was 2018 on corn. The last time you saw 3.15 for soybeans was 2019. And obviously, guys, 2015, or let's just say the 2018-19 time frame, were those good times as far as commodity prices were concerned? No, not at all. Very frustrating times. If I'm going to use 91 on corn, and again, these are numbers that can change. I'm going to throw 87 million acres in for soybeans. If I throw 87 million acres in for soybeans, you ask, why are you going to go so high? Last year, you had a corn-bean differential of 11 million, okay? And we said corn went down $1.74 year on year when beans went down $1.50 something, correct? Would you expect that gap to narrow considering the economics of the situation? Anybody? I expect it to narrow, okay? And I'll show you late in the presentation why I think that your swing acres could heavily go towards soybeans. But if I expect it to narrow 91 to 87, you're going from an 11 million acre gap to a 4 million acre gap. I think it's conceivable. But part of the problem for me is if I get down to 91, I got to ask myself, what did last fall do for us from an acreage standpoint on corn? It probably secured a lot of corn acres because the weather was fantastic last fall in most of the Corn Belt, and you were in an economic situation in the fall where corn was beating beans. It's not beating beans today. So it's going to be a complicated situation. 87, though, as you can see, you're looking at a 472 or even a 700 of 55 bushel yield. And I do think you could see a 55 bushel yield in our near future. Now, this slide did not come out yesterday, but it's one that I like to use that the USDA put out a couple months ago, because what it does is it shows you that Brazil this year is going to have planted for the 18th straight year more soybeans. And you say, well, when's this going to slow down? It's not. It's not slowing down anytime soon, all right? Bottom line is this. The Brazilian grower over the course of the last several years has made a lot of money. This year is turning into a bit of a challenge for them. And we could talk about that at great length, but we don't have time. I'm just telling you, it's 18 straight years of additional soybean acres planted, all right? You want to know why are these guys doing this? Well, you know, I was at Farm Futures here a couple of years ago in Coralville, Iowa, and Max Armstrong had a group of growers from Brazil. One guy farmed 300,000 acres or so, and he said, you know what? Max asked him, what was your gross revenue last year, just to get a handle on what size your operation was? He said about 250 million. And he said, well, what everyone wants to know is what's the profit margin in Brazil on an operation like that in that particular year? He said 35%. Well, do the math on that. Now, this year, they're not going to have that kind of profit margin. I can tell you that right now. Interestingly, after his presentation, I talked to the guy. I said, how many combines you guys run? He said, 85 or 90. I don't know how many we got. I'm like, what's 5 combines? I don't know. Regardless, try to get your head around something like that. And there's several operations that size and above down there. Okay? They're continuing to grow. But the Brazilian farmer said, hey, we're only going to have a 135 million ton crop. This is the lowest estimate I've seen. I like using this, and here's why. How many of you guys think that the U.S. farmer is honest with the USDA about their yields? Anybody? How many of you guys, when the neighbor comes to your farm and asks you what you think your corn's going to make, have a different number for him than what you do on the USDA survey? Because I'm pretty sure you guys do that. And Jim can verify this. I've asked Lance Honig before. We were on a radio program with Todd Gleason from the University of Illinois. And I asked Lance, I said, how do you account for farmers being dishonest? He said, we have a factor for farmer dishonesty. Honest truth, I'm telling you. They know you guys are a bunch of lying sons of guns, and they're going to figure out a way to beat you on it.
And North Dakota is the highest.
Are they the highest? So what I'm going to tell you is I don't think we're 135. I think we're above 135, okay? But where we come in at, I don't know. Dan Bazzi was at our conference from Ag Resource this last weekend in Nashville, Tennessee. He's at 145, just to give you an idea. Conab's at 149. I think there's a lot of different estimates. Why are these estimates so low? Eric Snodgrass gave me this slide. We swapped slides in the winter. He's from Nutrien. Most of you have probably heard of him. But from 1979 to present, this is how dry they were in these particular areas. The zeros constitute the driest from October 1 to Dec 31. Obviously, it's a very important time frame. The ones are the second driest, so on and so forth. As you can tell, production areas in Brazil were hit extremely hard with drought conditions. Towards the end of the calendar year, you started to see some rainfall come in. All right, but bottom line is, where are the major production areas? He overlaid these states on your major production areas. Of course, the closer you get to the coast, there's not as much production. But the bottom line is, some of these areas are huge. That's actual size of these U.S. states he overlaid. Just to give you an idea. Now, at the bottom right, that is a graph with the dotted line is U.S. planted acreage. The solid line is Brazil planted acreage. And I'll tell you right now, I see no avenue ever of the U.S. farmer planting more soybeans than the Brazilian farmer again. I don't think it's going to happen. And as Jim said, hey, who's the number one exporter in the world for both corn and soybeans today? It's not the U.S., it's Brazil. And so how does that impact things? Weather issues in the U.S. don't mean what they used to. An all-out drought would still make the market rally, but is it going to make it rally to the tune that it did whenever we were exporting 50% of the world's beans? No, absolutely not. And you got to understand how that works. Right now, if Brazil's production is close to correct, they're going to have the most stocks on hand they've ever had. All right? The soybean market seems like it wants to find some life right in here, but I'm telling you, this would be a similar situation as the U.S. corn farmer holding on to 10 billion bushels of corn. It's going to have an impact on the market as it rallies, because world stocks are very strong as well. I will give you an opportunity to get a hold of these slides. I know they're videoing this, and you can, but I'm telling you, if you want to get a hold of the slide deck, I'll give you a QR code at the end, and you can have access to the slides, just don't redistribute them. All right, here's your 5 values of soybeans. Why are we not exporting beans? Because we're completely out of the world market. Now, export sales yesterday were actually better than what I assumed that they would be. We actually export a few beans. But guys, we're $50 a ton out of the world market as far as soybeans is concerned. It's making it very hard to export beans. And so that's what's happened over the course of time. You've lost world export share to a greater degree lately, whereas South America this year isn't too far from tripling the U.S. And so here's the deal. How many of you guys are concerned about the amount of export share that we're losing? Nobody's concerned about it. All right. And I'm concerned, but I'm not. Here's what I'd like to see. I hope that what Jim is saying is correct, and I'm hearing this. I'm hearing what I want to hear from you, Jim, though. That we're going to support renewable fuels, okay? Guys, here's the deal. Is the U.S. losing global market share? Yes or no? Do we need renewable fuels? Absolutely. Without a doubt, with total certainty, you have to have renewable fuels. We have to have the support here. But here's the problem with renewable, and I'm going to talk about it towards the end. The problem with renewable and sustainable, as Jim would tell you, is that if you tried to roll those industries out on their own and stand on their own 2 legs, can they stand on their own 2 legs? No, they need what? They need incentives. They need tax credits. That's all there is to it. There's your crush margins today, though, here in central Illinois. Crush margins are actually quite strong still, even though they're well off the highs we had previously. Crush margins of $1, you say, but what's that mean? Okay, and Jim talked about this briefly, but whenever we've crushed beans in the past in the U.S., what have we crushed them for? Meal, absolutely, to go into rashes, mostly for hogs. And you're like, what are we going to do with all this oil, right? We got to find a home for the oil. Soybean Association, find a home for all the oil. Figure out what you're going to do here. What are we crushing beans for today? And meal. That's why margins are where they're at. All right, so the bottom line is this. Margins are pretty good. You got crush plants that are either built or are popping up all over the Corn Belt. And what is the job of the originator for a crush plant coming online if your crush margins are $1 a bushel?
Don't run out of beans.
If you do, what happens?
You're fired.
Absolutely. You're fired. That's the long and short of it. And so you should see demand for beans stay strong because you've got to crush beans. We've had record crush for like 3 straight months, guys. Crush has been good, and I expect there to be some ebb and flow. The renewable industry is not going to just grow just nonstop. You're going to have growing pains, similar to when soybean oil got to $65 this last summer. What happened to it? It priced itself out of renewable diesel. And all of a sudden you use some other stuff, which you can use cooking oil, tallow, all kinds of things. That's what the March bean chart looks like. I mean, to be honest, there's not much to gain here. The problem with both corn and beans right now is you're below your moving averages. It's just a rough game. There's not much support to find anywhere. And the same thing goes with old beans and new beans. If you look at these charts closely, there exists a gap. Now, I don't know. I think we're running out of time for March beans to be able to go up and close their gap. But could no beans go clear back up there and close that 1240 gap? Yeah, I think so. I think you got a shot at that. I'm not saying you're going to rally 75 cents, but I think you definitely have a shot at it. So managing risk. Now here's your live look at 23 and 24 profitability. I always wait for the last guy to go down because he's saluting us, so why not, you know? But it's kind of rough. Guys, it is really, really rough. What good could happen, though? Let's talk about something good. I know that you guys have been waiting on some good news. Snodgrass thinks that you could turn off dry in Brazil through the end of the month of April. If that happens, what would that do? Okay, so let's just look at what's happened with Brazil. Due to way too dry conditions in the north and too wet conditions in the south, the bean crop went in the ground a little bit late. Later than what they would prefer. When you go in the ground late, what else comes late? Your harvest might come a little bit late as well. Obviously, beans are daylight sensitive, but your harvest is running behind normal currently, and I expect that it'll continue. So the safrinha crop is likely to go in the ground late. They've been getting rain lately. Bottom line is this. If the safrinha crop would happen to have issues, once again, there is one of your opportunities to see support in this market. If they don't, then all of a sudden you're heavily reliant on the U.S. to have some sort of an issue. So if the safrinha crop has issues, now I'm not one, to wish ill will on anybody publicly, okay? And I don't want to be a jerk, but guys, you need an issue somewhere globally from a production standpoint, or you're looking at the corn price, seeing a path of least resistance is going to be where? It's probably going to be down. All right, I hate to say that, but what's Drew Lerner say? He's another fantastic weather guy. We follow him with ADM Investor Services, who I broker through. He says the Western Corn Belt's going to be dry. Now, I know some of you guys don't want to see this. That's in the summer time frame. He thinks that you're coming off the El Nino and you're going to rapidly descend, and you could potentially be in a La Nina by the time summer rolls around, and he feels like you could be looking at dry conditions this next summer. Now, let's be clear about it. How many of us just wish they could get it right for next week? Okay? Now, I'm not trying to be a jerk. I was in Amarillo, Texas one time, and the weather guy was speaking in front of me. And I come up on the stage, and I thought, I'm going to have some fun with this, He's a local TV celebrity. Everyone knew who he was. I was the new guy. I said, me and the weather guy have got a lot in common. We come up here, and we put a lot of charts up, a lot of cool pictures. And guess what? We are never right, but you still invite us to come back the next year. Everyone in the room thought that was funny, except for one person. And he didn't think it was very funny. In fact, he didn't speak to me after we got done. I can't believe that you can't poke fun at yourself when you're marketing or weather. You're never going to know, right? I do wish they could get it better in the short run, but the bottom line is this. If you see this, and all of a sudden you've started marketing when the corn market gets to $5, then it climbs to $5.25, then it goes to $5.50 because nobody's getting rain, all of a sudden I start thinking about what happens if you sell too much, okay? Always stay flexible in your marketing plan no matter what you do. In 2012, I had a lot of growers that thought about 2008. In 2008, you rallied into pollination. You stepped off an absolute cliff. and you went down $4 by the time Deese corn went off the board. 2012, people said, I'm not missing that vote again. I'm going to sell into this rally because it has to do what? Eventually. It's going to rain. It'll have to rain at some point. Guess what? It didn't rain in 2012. And I knew a lot of growers in central Illinois. Like, for instance, I had 200 APH ground back in 2012. We raised 45, 50 bushel corn. It was awful. The problem is, what if you got 80 sold? Now you're buying 30 bushel back, and where are you buying it back at versus where you sold it? $2 or $3 higher. Be careful how you market this crop. I always say lock in a worst case scenario, but don't lose flex. Keep some flex. Crush plants. Jim alluded to this. Yes, there's lots of crush plants popping up. One thing I want to point out, who's investing in the crush plants? Oil. So you got big oil that's involved. Why would big oil be involved? You go out to California, can you buy conventional diesel for your truck fleet, for instance? Can you buy regular diesel? All right, so what do you have to buy? All right, renewable. Let's just ask this. Anybody ever had B20 on your farm? Biodiesel, B20, whatever. What's the percentage of soybean oil that can go into B20? It's not a trick question, guys. 20%. How much soybean oil can go into the formulation of renewable diesel? 100%. 100%. So if I am big oil and I'm going to get displaced, what do I have to do? If I can't beat them, what do I need to do? I'm going to join them. There's big tax credits involved. That's why these guys are involved in these plants. You look and see, biodiesel's not growing, all right? Renewable diesel is growing, is the bottom line. Now, I know Jim talked about EVs, so I've got a nice EV slide. See if you guys have any issue with this slide. Now, I am not anti-EV, okay? I'm going to clarify that. I know it works in a lot of places. You know, I actually, my cousin's got a Tesla. And I will tell you, I like fast cars too. And I'm telling you, when you put the pedal down on one of those things, you better have your seatbelt on because it goes. There's no lag. All right, but here's the thing. Does big oil like ethanol traditionally? No. What about big oil? Does big oil dislike ethanol as much today as what they used to? No. And here's what I'm going to say, all right? If I ask my son, hey, are you dating this young lady? He says, we're snapping, you know, like we're Snapchatting, you know. And so I think ethanol and big oil, they're Snapchatting, you know. They're doing something. I don't know if they've done things they shouldn't be doing, if you know what I'm saying. But they're in, you know, cahoots somehow. Why are they in cahoots? Why is engine manufacturers working with big oil? Why is big oil working with ethanol? Why are all these guys working together? They have a common foe. They have a common foe, which is really good for us as a people because we've got cleaner burning fuel, because we've got engines that are better. Bottom line is this. If big oil, by way of these associations, is essentially supporting agriculture, guys, what better of a development could you possibly see? Now, is this going to get us jump-started to a profitable year in 24? I don't think so. I don't think so. But moving forward, this is a great development, all right? And so energy definitely is a strong lobby, usually the strongest. And if they're going to be firmly behind renewable, I think it's a good thing. When you talk sustainable, obviously we had a plant built in, LanzaJet, I believe is the name and so they are not burning corn-based ethanol though, guys. That's the problem. This plant in Georgia. Now the government has said they'd like to put a 3 billion gallon goal, correct, Jim, by 2030. How much is the plant in Georgia alone, how much are they capable of producing? 10 million gallons. So like Jim said, if corn-based ethanol is going to be a feedstock that will qualify for tax credits, guys, the boon for agriculture and rural communities will be robust. It will be robust. It's going to take a while, but it's going to be a big deal because you look globally, we produced 158 million gallons of sustainable aviation fuel. How much airline fuel did we burn through in the U.S.? You can see right there in October. Billion gallons. I mean, you're talking a significant chunk of fuel. So you see the U.S. dollar, we've rallied. It seems like we've plateaued. It's a good thing. Obviously, a strong dollar is not good for us as far as exports are concerned. Nat gas, I think I want to spend just a little more time talking nat gas. I had a lot of growers in December calling me and saying, why is nat gas falling out of bed? And I know it's more complicated than this, but one thing I said was, I'm sitting here in Central Illinois, it's December the 10th, I'm feeding cows this afternoon, I got a t-shirt on. You know what I'm saying? I mean, it's not looking like a super cold winter. Yes, we had that super cold spell in January. All right, you rallied the market back up. Here's my point. What should anhydrous ammonia be doing whenever nat gas is dropping precipitously? Should be moving lower, correct? And so if I'm a grower and I still have potential to put corn in the ground and I'm trying to figure out what I want to do, I'm not getting in a big hurry when I've got nat gas under $2. Yes, the pipeline got empty. You know, they're talking about we just had a huge run in anhydrous for this last fall. No question about it. But I'm not getting in a big hurry here if I still have anhydrous needs. I think the more overarching question is, do you plant corn? And one thing I'll tell you guys sitting here staring at me is that you're in a better situation than your average Illinois corn grower because you have more options to plant. You have more diversity. You have more diversification. An Illinois corn grower right now is in a bit of a bind, and I'll show you why in a minute. Now let's talk cattle real quick. Lowest we've seen the cattle herd, total herd inventory in 73 years, right? I mean, guys, this is kind of a big deal. Last year, and you talked about a 65-year low in the cattle herd inventory, I said, be careful whenever you're running placements in cattle on feed so strong. Why? What are you doing? Are you growing the herd whenever placements in cattle on feed are strong? Absolutely not. I told Paul Yeager with Market to Market in January of last year, I said, I think fat cattle are going to $200. He's like, what? I said, I think it's going to happen. And what did we get to? Anybody know? I think $199.60. I mean, I missed it by 30 or 40 cents. I don't know that we're going to $200, but I can tell you this. We've got excessively low numbers, okay? I'll just show you the charts real quick. Obviously, this cattle market, whether you're talking fats or whether you're talking feeders, you're above all of your resistance, okay? How high can this market go? I don't know. Most people see this, all right? When you look at cattle on feed, October, November, December, all over 100. You looked at placements, 106 and 105 in September and October. What will placements look like in September and October this year if more people choose to keep a few heifers around instead of selling them or putting them on feed? Because last year was so excessively high, it's going to make this September and October, in my opinion, look excessively low. And I'm not so sure you don't print a high 80 number, to be honest with you. And if I'm a fund, why did the market drop $35 on fat cattle? Because the funds puked their long position. They got out. They said, we think it's gone up enough for now, we're getting out. And guess what? At some point, they're like, you know what? We don't want to be short when you're looking at really low numbers. And so if I'm going to get bullish anything, it's probably going to be cattle. But here's the thing. Speculatively, first of all, I don't want to buy $186 April cattle. I'm just not interested. You got to be careful. So the other way I look at it is this. If I am someone who was sitting here a couple months ago or a few weeks ago, and I was absolutely terrified after cattle dropping $35 a hundredweight, and I'm looking at 165, now that I'm back $20 higher, maybe it's time to start protecting these suckers again. All right? When are you most bullish? When the market's going up and at the top, okay? I know everyone's friendly right now. Fundamentally, cattle have every reason in the world to continue higher. They do. I'll give you that. But guys, if you sit here and you go back to 160 after having a chance to sell $20 higher once again, you're going to be kicking yourself. You're going to be really frustrated with yourself because you had a second chance. All right? Now let's go back. I will take questions on whatever it is. Cattle, I don't care what it is. We can talk. I want to talk about the University of Illinois numbers because it scares me a little bit. It gives you a microcosm of what's going on in corn and soybean country. I just want to show it to you. And the reason why I think swing acres firmly swing in the direction of soybeans. They're saying that in this particular area of Illinois, this is based upon actual numbers, that the relief from input costs is not quite as strong as what I would say it was. I think that's very concerning if they're correct here, okay? Input costs in my part of the world had a lot of folks get $100 and $150 of fertilizer relief, actually, from one year to the next. But this is what they're saying for input costs. In that same area, they're saying that the corn advantage for soybeans is actually a negative, and that soybeans are going to make more money than corn this year right now. Now, once again, last fall when you were making the decision, what was going on? Corn penciled better than beans at the time. And so here's another thing we got to be careful of. A lot of people said, listen, fertilizer has come down precipitously since the fall of 22, fall of 23, fertilizer's cheap, right? And I said, okay, do you think maybe you should go ahead and sell some corn if you're spending all that money on fertilizer? And people said, well, I don't know what the big rush is after fertilizer's dropped so much. I said, what if corn goes to $3.50? Well, it's $5 right now. I can't go to $3.50. I'm afraid corn's like, hold my beer and watch this, right? You know what I'm saying? Like, I'm not trying to be a jerk. I'm just saying this. I bought my fertilizer for the 22 crop in the fall of 21. Did I get the highest price for that particular corn? No. I bought my fertilizer for 23 in the fall of 22. I stayed consistent. If you read my newsletter, I talk about how many bushels does it take you to pay for your fertilizer. Lock the ratio in when it's advantageous. All right? And so what did I do for the 24 crop? You guessed it. I locked in fertilizer and the price of corn at the same time. And the bottom line is this. It looked good last fall, but far too many of us make the decision on what the economics look like when we're making the decision on what we're going to plant, and then we're not smart enough at the time or disciplined enough to actually make a sale. That's a cardinal sin. If there's anything, I want us to journal what we got wrong in 23 and try to get better, because you'll get the opportunity, listen carefully, you'll get the opportunity to pay multi-year highs for fertilizer again. You know what I'm saying? So what does that mean is going to happen? Price of corn is going to come up again at some point. I don't know when that happens, but darn sure be careful not to make the same mistakes we made this time. Because that's what it looks like on these particular producers, is that they're going to be underwater this year, firmly underwater. And I was telling a couple of folks this. There was a cash rent auction in the last month in Central Illinois, and I know this to be a fact. One grower paid $700 for cash rent. Okay? Obviously, how does that work on this? It's tough. Okay? But the bottom line is there could be some serious pain inflicted this year. We have to be very careful how we manage ourselves moving forward, because when we're locking in fertilizer, when we're locking in cash rents, when we're doing all that in the fall, what do we have to be starting to do? Got to sell some corn. Absolutely. That's what the different regions are. You can look through this when you get on, but it just shows you, just to put a wrap around it, that central high area that they were talking, average cash rent in that entire area, according to the stats that they actually look at, is $363. Okay, that's the average cash rent for that whole area. In every single region of Illinois, you're looking at negatives if you're paying the average cash rent. Now, I know not everybody pays average cash rent. Now, as I wrap up here, the cost of carry, so you holding the corn in your bins today is costing you about 3 cents a month. Holding corn or soybeans is going to cost you around 8 cents a month. If it's in the elevator, tack on the storage fee. You say, well, I've got free DP. I don't know if you guys have free DP up here. I used to be in the elevator business. And then whenever we got out of the elevator business, we sold to a company that was Growmark owned. And they didn't really like it when I said what I'm about to say, but I always say this, there's nothing free about free DP. Because when you have free DP, you've taken your bushels that are that is what you use to barter with. That is what you use to make deals with. And you're putting it in someone else's bin. You call him, you say, hey, I heard you gave my neighbor 10 over. Would you give me 10 over for the corn in your bin? What's he going to say? Well, that's too bad. I've been storing this for you for free for the last 2 or 3 months. That's your 10 cents, right? You have no bargaining power whenever it comes out of your bin. Understand what it's costing you to hold on to this stuff. Because when you're in a carry market, just like the guy in Kansas, whenever he was in a market that was inverted, they wanted the corn then. When you're in a carry market, they're saying, we really don't want the corn right now. But here's the problem. When Deese went off the board, March's job was to do what? March corn's job was to do what? Go down to where Deese was and maybe even make a new low. When March goes off the board, what do you think May corn's going to do? It's probably going down to where March was. Just understand how this market works. So a few ideas, I'm buying an at-the-money put if I'm a producer that can make money. Let me quantify this. If you're a producer that says, I can't make money today, don't get scared into making a sale just because some clown came in here and was bearish today, okay? And yes, that's what I'm calling myself. I don't know anything about your operation. I'm just a guy that's talking about the markets. What I'm going to say is if you can still etch out a break-even scenario, why not cover yourself? Because I firmly believe that if Brazil has any crop at all, and we plant 92 or 93 million acres, you're looking at Deese corn, I would almost bet you money it goes under $4 by the time it goes off the board, okay? So I want to at least protect myself from a disaster, okay? Here's the problem. Yes, crop insurance is a fantastic program, but this is going to be the first year in 3 years that most producers in the Corn Belt are not going to be able to insure anything other than a disaster doesn't happen. Last year, you could insure profit in most cases. This year, you will not be able to insure profit in most cases, okay? So I at least have to latch onto this. I don't mind selling a call above the market. For instance, if I've got corn on hand. If I don't have corn on hand and I'm planting a crop and I'm trying to figure out whether to sell, I never sell a call option unless I have crop insurance. I have to have something on the other side of that. It's called a hedge. When you're losing on one side, you're gaining on the other. And if I'm going to tempt the market to go to $5.50, how many of you would gladly sell fall corn for next fall for $5.50 today? Several of us, right? So I don't mind doing this on a percentage of my bushels. The other thing is, a lot of guys are saying, hey, I want to sell in August short dated. So it's based on Deese corn. It's going to expire in July. If we find out we've got a crop by then, and you put 20 cents in your pocket, that's 20 cents you're going to put on your cash price eventually. And what I have a lot of guys do is they do that, and then they turn around and they sell a December call. And I know I'm probably talking above a few heads here, but I will answer any questions you've got on this stuff, and you can call me afterwards because I give you my contact info as well. Very similar stuff on soybeans if you've got them. But once again, I know here's what the rest of the Corn Belt needs you guys to do. Not plant corn and beans up here. Plant something else, okay? I mean, guys, we don't need 93 million acres of corn. And Jim, you've heard this too. I'll be out in Nebraska, and you know what those guys say? Man, I hope you guys burn up this year. They tell me that every year when I'm out there. Thanks a lot. I appreciate that, But bottom line is this. Where there's ability to plant other things, the economics are probably going to force a lot of us to do that. I highly recommend you do the math on every single one of your alternatives and go where the money is. Because the bottom line is this, it's going to be a challenge to make money on either corn or soybeans. So I'm going to take questions. That is my contact info. If you want to shoot me an email, if you want to give me a call, you can just go ahead and take a snapshot of that, and then I'll give you my QR code in a second. Once again, I have no issue with anybody having my slide deck, but occasionally my slides show up in other parts of the country, and I don't really like that too much. So I would appreciate if you don't share them or distribute them, but you can certainly use them yourself for whatever you want to use them for. Questions?
All right, thank you. We do have a few online. Again, there's a couple mics here, so feel free to flag one of them down. But since you mentioned other crops, I'll start with this one. Many of the producers in the audience are spring wheat producers. Would you comment on the wheat fundamentals and market potential for 24?
Yep, and I talked about this with some folks last night and again this morning. So whenever it comes to wheat, of the big three, I kind of feel like wheat could be the one that kind of leads us, in all honesty. When you look at global and domestic wheat supplies, we've gotten to stocks to usage levels that are a lot lower than what historically we've been. Now, it looks like the forecast is that we're going to see wheat stocks to usage go maybe from 31% to 34 or 5 this year. But again, historically, we've ran over 50% for a long, long time. And so we've kind of whittled this thing down a little bit. Now, I think spring wheat acres could be subsequent. I don't know that we're going to see the spring wheat acres that we're going to need. So personally, I think a lot of it depends on what happens, for instance, in the month or from now until all this wheat's completely out of dormancy, like some of your winter wheat. There's been some extreme temperatures this winter already. And, again, Eric Snodgrass was at our conference last week as well, and he said there is the chance you could see another round of this winter weather And if you don't have good snow cover, I think that it's something to keep a very close eye on, because I don't think we've got a lot of bushels we can lose. I mean, Australia didn't have a great crop, but again, from my hope is we've seen wheat pull corn and beans out of the doldrums before. Now, if wheat catches fire and we get a bit of a rally in here, I don't see July going above maybe 650 or 660, which is a pretty good rally from here. But I don't see that happening unless you get a major issue here in the U.S., okay? But if it does, then I think that you can pull corn and soybeans along, but don't think that we're going to be going back to levels we saw the last year or two.
All right, I got another one here. Says, what turned around the market from the last time that a $3 billion carryover was projected in 2019?
I mean, there was a handful of things that happened on the heels of COVID, okay? So, you know, you got into, for instance, corn prices were cheap enough. We got demand. Demand was fairly strong. Exports were decent. You got into 2020, you know, and everybody thought that it was just going to be a horrible year once again. And then you turned around and you started selling corn to China. The other thing, you had a derecho in Iowa. Bottom line is then Ukraine started having issues, okay? And so you put all those things together and then you ended up with a really good 3-year run. Now, are all those things going to be able to come together in a year like this? I mean, the problem that you've got is that in 2018, I believe our carry was 2.2. You know, in 2019, there was forecast that you could go up to that level, but then you ended up sub 2. And so bottom line for me is right now is that you've got world stocks growing, you've got U.S. stocks growing, and I think you're going to be hard pressed to be able to turn around and see what we saw in 2019 occur. My fear, if you will, is that you're going to see more of a 2015 through 19 time frame. I'm not saying it's going to last 4 years. I don't know how long it's going to last. I think you could see a couple, 3 years of pretty tough sailing in here, you know, unless you get a major disruption somewhere.
Again, raise your hand high. We got mics here on both sides of the room, so feel free to. So I got another one. It is Super Bowl weekend, so I'll ask it. I think we all want to know how much of the 1 million gallons burned in October was done by Taylor Swift.
A lot, I believe. I don't know. I would say I don't even know why this tripped me, but Jim's heard this too, I'm sure. But how many of you guys have heard that we rally in presidential election years? Okay, it's true, but don't make that a marketing plan. You know, I mean, guys, there's been far too many people out there saying, "Oh, we're going to take off like a rocket." And you know what? If we do, great. And here's how I look at it. You know, if let's say we make a sale at 480, and it's a base hit at best, or maybe even a walk, but we're on base. We didn't lose money on it. If your first sale is your worst sale, but it's profitable, you're going to have a pretty darn good year. Okay, so I want to incrementally reward the market if it rallies, but I don't want to sit here on my hands because, again, some joker was on TV or on the radio and said the markets were going to take off and go. That analyst knows nothing about your operation. I know nothing about your operation unless we have a personal relationship. You've got to base your marketing on what you know about your operation, because far too many of us watch TV shows like Market to Market, U.S. Farm Report, you know, Max Armstrong show, you know, and then we read all the magazines and then we wonder why we're confused. You know what I'm saying? And it's because you've got all these quote unquote experts trying to weigh in on what you should do with your farm. And guess what? My dad doesn't have any debt. So do you think that he can market differently than I can do and still sleep really good at night? You better believe he can. Every one of us has a different situation. We need it to be handled differently as well.
There was actually a follow-up to that, so that was a lead-in.
Okay.
The question is how quickly do you think this aviation fuel will hit the market and we'll see the demand?
It's going to take a little while to build it out. I mean, the bottom line is this. Let's say, I mean, Jim, do you even think it's capable that we could get to $3 billion by 2030?
If the incentives stay there, you can.
I mean, it's going to take a while to build the plans, first of all, and then to update the plans to get into sustainable. But if he thinks that we can, I'm telling you that if you can get to $3 billion, guys, it is going to be a boom or a boon that will rival, if not accelerate, above and beyond the initial ethanol boom. I'm telling you, it's going to be a massive development. We really firmly, if you guys have never called one of your representatives or one of your senators, now's the time to do it and just say, we need desperately as much as much pressure as can possibly be, to support renewable fuels. Knowing everything we talked about this morning, I once again will tell you, without renewable fuels, the U.S. farmer has got a very tough road ahead of it moving forward as we continue to lose global market share. We have to understand that.
All right. We'll put you on the spot. What are the realistic targets to hit for 23 old crop and also 24 new crop?
I mean, I'm getting into the point right now where I don't know that I really want to hold on to 23 anyway. If you got a rally, we talked about this a little on 24. I'll get back to old crop because I've got a combination strategy that I think can work for some folks. But as far as 24 is concerned, can you get above and beyond $5 again? I think you can. But you're going to have a significant amount of hedge pressure the closer you get to $5. Why? Because everyone's going to want to sell at $5. And so if I do the math and I find out, hey, I can make money at 480 D's corn, if I get to 490, why not set a floor in place and then see what the upside does? I mean, again, you're setting in a worst case scenario with some flexibility. Now, whenever I'm looking at, for instance, old crop, let's say I want to step in and sell my corn right now today, but I don't want to do it without some sort of skin in the game. One thing that we've done for some of our growers is step in and buy either at the money or very close to the money call option in the July, like let's just say a 460. If you go in and look at, hey, what is a 460 call option? And then I want to finance it using like a 560 December call. And it's the same thing that the elevator does when they have those double up features, if you will. Okay, what am I doing? I'm long at the money on July corn, and I'm tempting the market to get as close to 560 or go beyond it as what it possibly can. Again, would I do that without buying crop insurance? No, I need something to offset my short call. But what is going to offset the short call between now and June? The long July call. And so I think that it keeps you in the game. It gives you the opportunity to participate in some upside. And sometimes what we need to do is to buy that call to give us the wherewithal to go ahead and get rid of some of these bushels. Now, I know some of you guys might say, well, I want to have a hedge account. I know a guy that went broke with a hedge account. How many of you guys have heard of someone that went broke using a hedge account? Anyone? Okay. Well, here's what I'm going to tell you. They weren't using a hedge account to hedge. You don't go broke hedging. And you're not working with the right person. And I'm not throwing shade at anybody. I'm saying a hedge account's designed to do what? Hedge risk. A hedge is supposed to be gaining on one side, losing on the other. And one thing I like doing is I put leverage plays in, like I just told you. I want to leverage myself so that if the market really goes up and forces me to pay a margin call, I'm actually happy about it. Okay? And so a lot of folks that's got old crop, if you do nothing else, I don't want to have any in the bin at the elevator right now currently. Okay? I just don't. I don't want to pay commercial storage. I don't think it's going to pay you to do it. But if you do nothing else with your bushels at home, sell a few calls above the market, tempt the market once again to go higher, and hope to goodness that you pay a margin call on it. Because that means that every bushel that you hedged against by selling those calls is actually going to be gaining value, okay? And so that's the least I would do. I want to get out of it and own it on paper because it's costing us too much to own it right now.
I think we had one over there.
Hello, there we go. Let's go down another path with the aviation fuel. Let's talk about the carbon sequestration with the pipelines. It's push and a pull with the corn industries. Some guys don't want it, some guys want it. And, what's your comments on the sequestration?
To be honest with you, I don't even want to comment on it. I don't understand it enough. Jim might have better comments for you on it than me. The problem I've got with it, and you're right, people either love it or they hate it. Right. And there's no in between.
But you need a pipeline.
You need a pipeline. You need a pipeline.
But it's an emotional issue when you're in that
Absolutely.
area. That's why I always ask if it's going to go on a farmer's farm when I answer it.
Or look for a side door. Yeah, we need a pipeline, but whether or not it happens or not, that's you need one. Period.
But that will help the aviation part of it?
Yes.
Absolutely. Any other questions? Yes.
If the safrinha corn crop is maybe going to be dry, if the safrinha corn crop, if we can hope that we're going to get maybe a dry rally on that, what month would that maybe likely occur that we'd be able to look at that?
I mean, I think that the whole complex would get some strength, but you're going to look probably more to rally, on new crop than old, in my opinion. I think you could see some exports come into play here. But again, I think all of them would rally. It's just there's going to be more pressure, so to speak, on the U.S. farmer to raise a decent crop this year coming forward. I wouldn't call it pressure. I would just say that there's going to be a little bit more angst, if you will. I mean, the thing is, if safrinha crop, let's say it drops 20 million tons from today, that'd be a massive drop. You're talking 18% drop. If you see that sort of a drop, then you're probably going to simply hold world stocks high in that 2-year window, okay? I guess the best thing that I can say to you is that the safrinha crop is not necessarily going to cause a rally, but it could keep us from going to $3 corn or $3.75 corn, okay? You need some sort of a stabilizing influence, because whenever you're building world stocks, you're building U.S. stocks, you're running out of reasons to give the funds to cover those short positions. I mean, they have to have a reason. If they do cover all at once, let's say safrinha, we get 3-4 weeks away from pollination, it's hot and dry, and it's 110 degrees down there, and they had that in October, November, December. If that's the case, the funds will cover very rapidly, and the door won't be wide enough, correct? What's going to happen in that case is that, for instance, May corn is going to rally through the roof if March has gotten off the board, and maybe you get a 30-40 cent rally. Your basis is probably going to widen half of that, so your cash benefit, if you will, won't be there. So some people are asking, should I do a basis contract? Well, if you're bullish, I don't have a problem with you doing a basis contract on some bushels. I wouldn't get super carried away, because what happens if safrinha doesn't burn up is that the market continues lower, and then what happens is basis has to do the work to get the bushels out of your hands. So don't put all your eggs in any one basket right now if you're not going to go ahead and sell the crop. If you're going to sell the crop, keep an ownership, I think, is a good idea, because I could see a much higher potential for a board-based rally than I can a flat cash price rally. Flat cash price is not going to rally as much as the board if you get a board rally.
Matt, would China bookings be a tip-off too?
Absolutely. I mean, the thing is, I don't know what this China crop is. It's so hard to wrap your brain around it. Depending on who you ask, you can have a 30 million ton difference in estimates on this China crop. But China is either building stocks or drawing down stocks, one of the two. It's a really interesting dynamic that you see there. But they certainly have had times in the last 3 years where they've bought a lot more corn than anybody expected them to. And so if we get into a weather pattern like that, I firmly expect China will step in and buy U.S. corn. Why would they do that? Because they don't want to buy it at a higher price. Okay? Now, the only thing that concerns me and frustrates me is that if China's buying corn, we're not going to find out about it the day we are unless we're smart enough to see the board's up 12 cents for no other reason. If the board's up 12 cents for no reason that I know of, one thing I know is China's probably buying corn. Because in 2020 and 21, what did you guys see happen whenever China's sales were announced? The market was up 12 cents. As soon as the announcement was made, where'd it close that day? Down. Do you think anybody might have known that those sales were made already? You think China might have played the board? Certain people in China? They came out and said they're not supposed to play the board anymore. Why? I mean, bottom line is, if I'm China and I just bought a ton of corn, I'm going to go along the board. And I'm going to wait until the announcement's made, and then I'm going to lift my position. I'm not saying it happened, but I would imagine that in some cases there are people that took advantage of the situation that had knowledge of it. But I didn't have knowledge of it. So it's kind of frustrating. If I would have, I wouldn't have shared it with any of you guys either, I'm telling you right now. But I wouldn't be in Fargo today either, no offense.
With that, thank you, Matt. Any
Yeah,
last
I'm
comment?
getting into lunch. That's my risk disclaimer, so nobody here can hold me liable for anything that I said this morning. Thank you for having me here. I appreciate it, and thanks for letting me go this morning. We switched around, and the reason is because I wasn't going to get home till 2 a.m., and Robert was gracious enough to let me go this morning, so I'll get home tonight. Thank you for listening in. Appreciate all you guys. Get a hold of me if you want to talk.
Thank you.